Sir, can we start, sir? Sir?
Sir.
Sir, can we go, sir?
Yeah, I think 3 more minutes is there. Maybe you can start. Yeah.
Yes.
Yes, sir. I think we can start.
Sir, I welcome CA Murali Krishnan, sir, for the live program on today's topic. Today's topic, applicability of FCRA to CSR handling. And I thanks for SIRC of ICI organizing this program, and welcome and thanks for CA Sinnamastan, sir, the chairman of SIRC, and thank for secretary Naresh Chandragalli, sir, for organizing this program. I welcome sir Murali Krishnan, sir, for this program. And brief about CA Murali Krishnan, sir. Sir is a fellow member of Institute of Chartered Accountants of India, ICI, and the Institute of Company Secretaries of India, ICSI. And sir has overall more than 15 years of experience in practical experience and practicing in areas of FEMA, Sorry for the inconvenience, sir. SAR is having more than 15 years of experience, practical experience, and practicing in areas of FEMA, FCRA, SCBI, ODI, ECBE, and compounding proceedings, FIBE matters, company law matters, NBFC, public issues, tech over courts, private equity matters, conducting due diligence, valuation, and capital marketing issues, etc. And also presented papers on said topics. He is actively engaged in the activities of ICA and ICAI and ICSI, and regularly the faculty of professional institutes and corporates, government bodies, and undertaking training programs and presented papers, various topics, above subjects. So with all things, I welcome CA Murali Krishnan sir to take over, sir.
Thank you. Thank you. Good evening, friends, and happy and warm welcome for this program. And also a happy New Year 2023. And of course, we are hoping, lot many changes are coming in various regulations because the way the government is implementing various aspects. Sorry. So today topic, the one which is very relevant considering the present implementation by the MHA, that is Ministry of Home Affairs, in terms of the enforcement of the regulations or creation of the infrastructure, adequate infrastructure to enforce the regulations, is actually taking a giant leap of activity. So definitely as a professionals, we are having certain responsibilities to observe that whether the employers that we are working with or the customer, the clients that we are advising, are they falling into the regulations of the FCRA, whether it is regular donations or charitable activities that we know, or it is in terms of the CSR funds that are coming into picture. So basically, my approach is, we will have some of the conceptual understanding of FCRA, because before we come to the stage whether CSR and FCRA go hand in hand, are they aligned, do they have any conflict? So basically, I thought we'll run through some of these concepts so that sometimes, when we don't know the law in its right perspective, we may presume certain aspects. But rather, if we can understand them in its earnest model, and thereafter we try to apply them in the day-to-day affairs of either personal life. Sometimes, of course, this FCRA law is applicable for individuals also, to the non-profit organizations that we know, and also sometimes for the companies which are doing, for-profit activity. So let me present a small presentation on this aspect. Please give me a minute. I'm sharing my screen. Yeah. So basically, so this law, FCRA law, is made with the intention to see that the national security is the paramount importance to the government, rather than individual benefits of the, whether it is a non-profit organization or a corporate or whatever. Primarily, it is looking at the conceptual understanding is whether it is meant for the national security purpose only, and it's not for individual interests. And this present FCRA law, which has been made in the year 2011, so basically it is made with the intention to regulate and accept the utilization of foreign contribution. And this is actually a consolidated law, because we have the FCRA law 1976. So that has been replaced in the year 2010, and it has been made effective from 1st May 2011. So this law has come with the stringent guidance with respect to the management of the national security, with the objectives of removing the difficulties that have been faced by various stakeholders, because earlier law, has very minimal governance and maximum interference. That's how people used to look at. And also there is a concept of, increasing the transparency and accountability, because earlier under FCRA, whoever receives the funds, there is no compilation at the country level and the activity level, and there it was not used to be displayed or disclosed to the public in any public platform. But after this 2011 has come into picture, when the government has started the concept of e-governance in its rights period. So now we are able to see what are the donations that are coming into the country, which are the areas they have been utilized. So that way, the new law is actually aiming to provide the transparency and accountability of all the stakeholders. And also, it may be relevant to understand this law is applicable to whole of India. Of course, now the concept of Jammu and Kashmir considered to be a separate party is no more. But even then, it used to be, while Jammu and Kashmir used to be a separate state, still it was applicable to the whole of the country. And also, this FCRA law is applicable to NRIs who are citizens but staying outside India, because sometimes an individual may channelize these contributions through his personal account. So obviously, this law is applicable to NRIs who are outside India, and it is also applicable to the associates, branches, subsidiaries which are located outside India, but they are connected to the companies registered and incorporated in India. However, this FCRA law is not applicable for the transactions between the government of India and foreign countries, the governments of foreign countries, because obviously, that is a different perspective that we need not to cover under any specific law. So when you look at briefly this FCRA law, it has 54 sections and 24 rules and 12 forms. So comparatively, this is very simple and precise law, because this is being a specific or special law. We don't expect too many of sections or regulations or rules. But still, recently, that is for the last 3-4 years, we are seeing the government is making several amendments where they identified certain deficiencies in the implementation of the law. So that way, the government is showing a lot of importance to this. And also, recently, the MHA has started the concept of audit, because though it was there in the FCRA law, the government was not very particular. For the first time, they started, the MHA has deputed experts to audit the accounts of the organizations which are receiving the FCRA funds. So that way, definitely we are going to see, a lot of governance and, any procedural issues that the government is identifying. They are actually taking very serious action as several steps to ensure that the enforcement happens at the minimal loss of time. So that way we should be very clear on this particular concept. So earlier, we used to see that the government used to ask a question now and then, very rarely. So we used to take, okay, this is not much, issue for that matter. So there are 9 chapters which are, breaking down these 54 sections. And these are the primary forms which will come into, now and then when we see this, that basically which are the forms we need to file. So in a summary is form FC1 is meant for the intimation of receipt of foreign contribution, either by way of a gift or when the gift, there are any articles given or securities are, given as a gift by the foreign source. And in case any such amounts are received by a candidate who is standing for election. And FC2 talks about any application to be made by the certain specified persons who are going to accept the foreign hospitality, because apart from foreign contribution, this law also governs the foreign hospitality. So what is meant by that? Obviously, if somebody is going to be hosted by a foreign source in the foreign country, it may have certain, what you call a sensitivity or a favorism from the recipient of the foreign hospitality. So it may be jeopardized or, impacting the country's benefit, or the intent is to have the national security as the paramount. That's why I've been reiterating. So that way FC2 is a form meant for making application for foreign hospitality by certain specified persons. And form FC3A talks about application for granting of certificate of registration. That is the 5 years registration that we talk typically. And FC3B is for an application for seeking the prior permission of the Government of India, where the regular registration of 5 years tenure, if it is not available, and someone wants to accept any FCRA funds from a foreign source, then they can make an application by way of a prior permission. And another form, that is form FC3C, is about the renewal of certificate of registration. Because before 2011, when this law has been, coming into picture, before 2011, there was no concept called renewal of registration under FCRA. But now from 2011 onwards, the government has made it mandatory that every 5 years, the organization has to make an application, and there should be a process the government want to, undertake, and they can approve or deny the COR. Okay. So that way, we need to understand that now the government is monitoring the whole, participants or the stakeholders, and even they are taking several steps, because if you see somewhere in 2016-17, the government has cancelled many registrations in en bloc, like 4,000 registrations at a time or 10,000 registrations at a time. So naturally, this is one of the key aspects the government is monitoring. And FC4 is an annual return to be filed by the specified organizations, that is those organizations which are receiving the FCRA funds. And FC5 that used to be there, now actually it has been removed. FC5 is a form which has to be filed for seeking prior permission for transfer of the existing foreign contribution from one registered person to another registered or unregistered person. But this form has been removed because from September 2020, when there is an amendment, the government has removed the concept of transferring the funds from one organization to another. So now there is no such concept. Only the fund has to be transferred back to the government, but not between two organizations. And FC6A is an intimation for change of the specified details such as name or address of the organization. But if it is within the same state of the association. 6B is a change of nature, that is whether it is a company to trust or trust to company or whatever. Whether a change of any nature or its aims or objectives, or any registration with the local or revenue authority, because some of these registrations are relevant. So whenever such changes are to be intimated, we need to use the form FC6B. And FC6C talks about an intimation for change of designated bank or the branch of a bank or a bank account number, because now the government is monitoring the FC receipt through this single account called, the State Bank of India, New Delhi main branch account, and also any utilization accounts. So whether there is any such change, obviously the designated bank from one bank to another, if you want to shift all those stuff, we need to intimate in form FC6C. FC6D talks about the intimation for opening any additional accounts towards the utilization of the foreign contribution. So this is the form we need to file on an event based. And 6E is for the change in key members, like we call it a key managerial person or whatever, trustees or whatever. So any such change should be intimated within 30 days of the change in form 6E. FC7 is a form for surrendering the certificate of registration. There's an application that the organization can voluntarily make. Earlier, in fact, this used not be there. Only a cancellation or natural, the lapse of the renewal. That's how it used to be there. But later, the government has introduced the concept of FC7. So typically, when we say that it's a foreign contribution, to call it as a foreign contribution, first of all, the payer or the donor should be fulfilling the criteria laid for the foreign source. So unless the amount is received from a foreign source, the concept of foreign contribution doesn't arise. So that way, we need to understand who is called a foreign source, who is considered to be foreign source. Whether the listed, the nature of persons are, one is government of a foreign country or any of agency of the foreign country, right? And international agency such as United Nations or any specialized agencies, of course, the government has issued certain exemptions in terms of the specified people who are not considered to be, who are exempted from the compliance of the FCRA. Any company or a corporation incorporated in a foreign country, obviously, because that's being a foreign body corporate, that is considered to be foreign source. Any multinational companies, such as say Microsoft example, if they have presence in multiple countries, they are considered to be my MNCs and they fall under the concept of foreign source. And foreign citizens. So this is very important because sometimes this is the area where a lot of non-compliance are happening. If an individual who used to be a citizen of India, if they surrender their citizenship of the country and acquire citizenship of any other foreign country, they are considered to be foreign citizens. Hence, any amount received from such individual will be falling under the concept of foreign contribution. And any trade union in any other foreign country. So any trade union registered outside India, if they donate any amount to the Indian organizations, naturally it falls under the foreign source. And any foreign trust or a foundation mainly or solely financed by the foreign territories. So maybe we can see like, any trust is also giving any CSR funds to an Indian entity, even that foreign trust or a foreign foundation, maybe, based on that nature and of course, the registration, which country it is registered, all those stuff. Accordingly, it will fall under the concept of the foreign source. Hence, it will fall under the FCRA compliances. Any society or a club or BOP or AOI, right? So if they are registered outside India, such society is also a foreign source. Any Indian company which is having more than 50% of its paid up capital through foreign shareholders. Basically, there is a clause. So this has been introduced since the year this act has come into picture. But actually, there is a retrospective amendment that if the Indian company which is having FDI and where more than 50% of its shares are held by the foreign, we call it a person resident outside India under FEMA, under FDI. So if the Indian company shares are held by the persons resident outside India, and if such holding is more than 50%, that Indian company is normally considered to be a foreign source. But by virtue of an explanation inserted under the law, where it says, if the Indian company has received the FDI in compliance of the applicable rules or regulations and has complied with all such requirements, then even if more than 50% of the capital is held by foreign residents, still the Indian company need not be considered as a foreign source. This is a very critical amendment the Indian government has brought in with retrospective effect from 2010 when the FCRA law has come into picture. Because earlier, all Indian companies where the predominant shareholding is held by the foreign residents, that used to be considered to be a foreign source. And that has led to many problems. Hence, the Indian government has considered appropriate that it is now linked to compliance of the FDI, where if Indian company has complied all the requirement with respect to acceptance of the FDI, reporting of the FDI and everything, then such Indian company, or we call it as Indian subsidiary company of a foreign entity, is still considered to be a non-foreign source. So this is very important because this is directly connected to CSR payment from such Indian company to another society. Okay. And yeah, I think I'm seeing, a few Q&As are coming. In between, I will definitely address them one by one. So let me have this, at least the basics being, addressed. So the other section, which is very important, is what is the foreign contribution? Because earlier we discussed about who is considered to be foreign source. Then what amounts to be a foreign contribution? So any donation whether it is a delivery or a transfer of, if such donation is happening from a foreign source. So it should be, it can be anything being delivered, whether it is a cash or article or securities. These are the three things normally covered under the concept of the donations and all this stuff. So whether it is money or money's worth, then whether it is an Indian currency or a foreign currency, this is very important. So to consider to be a foreign contribution, the currency need not be always foreign currency. Even an Indian rupees will be still considered to be a foreign contribution, provided the money is received from foreign source. So that way, this is a twin objective, twin links that we need to see, that there is a money and the money is being paid from the foreign source, or there are articles or securities that are transferred or delivered by the foreign source. So that way, Indian money, Indian currency is not exempted from foreign contribution if such such Indian rupees are paid by a foreign source. Okay. So that way, if suppose an Indian company which has received FDI but not complied the prevailing FDI rules or regulations, the earlier notifications, whatever we know, any money transferred even in India in INR from such Indian company which is not in compliance of FDI to another Indian entity, then it will fall under the foreign contribution. So we have to be very clear on this. And any security or any donation of any articles on lease, even suppose if an article has been given, like suppose a car has been given as on a lease basis without any consideration, even such any free of cost lease is also considered to be a foreign contribution. And any article where the market value goes beyond 25,000. So these are the three things that we need to see. One is currency, whether it is Indian or foreign, any security, that is shares, debentures, etc., whatever we know, any article on a lease basis without consideration, and if there are delivery of articles where the market value goes beyond 25,000, then also the concept of foreign contribution will come into picture. Okay. And it also includes the secondary income. That is not only primary receipt, it also goes to the, like suppose in case of we have received any money, and if the money has been parked in a fixed deposit, the interest earned on such fixed deposit is also foreign contribution. It means primary income or primary receipt and secondary receipts, both are considered to be foreign contribution. And income generated from the assets created out of the foreign contribution. Suppose someone buys an immovable property, and if the immovable from the foreign contribution source, and such immovable property is sold, and there is a capital gain, such capital gain is also considered to be foreign contribution. And any infusion of foreign share capital in a company which is registered under Section 25 of the Companies Act 1956 or Section 8 of the Companies Act 2013. So if somebody is subscribing to the capital, which is a non-profit organization registered as a charitable entity under the Companies Act, then any foreign share capital received is also considered to be foreign contribution. So this is another area where we may slip in terms of complying the law. And any unsecured loans are loans at a subsidized interest rate. And if these loans are coming from foreign source to a non-profit organization, even that also is considered to be foreign contribution. So generally, especially these kind of receipts go out of the notice of a professional. So we have to be very cautious that not only primary receipt are generally known transaction, but these are the other forms where foreign contribution may come into the picture. So just let me have a look at it. I'm trying to see some of the questions. What is the procedure? Mr. Joseph has asked the question. What is the procedure to remove an utilization account and use it for local purposes? basically, an utilization account cannot be converted into a local purpose account when there is any balance out lying out of that utilization account, because utilization of foreign contribution should happen as per the procedure laid down. So in case we want to convert or we want to change the purpose of that utilization account, first of all the existing funds should be applied or should be transferred to another account, which is also designated utilization account. So once we have done that, and that too normally just by ensuring that there is no pending compliance from that utilization account, we can intimate a change to the MHA by filing the forms. So that can be done for the change of the utilization account. So Mr. Gauri Vaidyanathan, yeah. So there is a question that whether company with Indian registered office still come under FCRA. Of course, just because of it's an Indian registered office, we need not to say. But here the thing is, if the payer happens to be a foreign source and the recipient happens to be an Indian entity, be it a trust society or a company, irrespective of the registered office is in India or not, but the moment it is a transfer from a foreign source to an Indian entity, naturally this is considered to be a foreign contribution, hence falls under the FCRA. Another question is in case of foreign FDA. Okay, I'm not sure what does it mean, but I'm presuming that FDA coming from foreign source into an Indian company where the compliances are not done under the FDA rules or regulations, because now we have the concept of NDA rules, that is non-deposit, non-debt instrument rules. So that is considered to be FDA. So our earlier FDA regulations under the FEMA. So in case the money has been received from a foreign subscriber or a foreign shareholder and the complaints are not done under the FDA law, then such investment is not exempted from the definition of the foreign contribution or foreign source. So that's what we need to understand. So another thing is how the recipient of the donation can check whether the Indian company which is donating is complying with all requirements of FDA. Okay. So basically any company receiving the FDA and it is giving any contribution under the CSR provisions also, generally we need to take a declaration from the such Indian entity stating that it has complied all the FDA regulations, hence it doesn't fall under the foreign source definition. So it has to give a declaration. Then based on such declaration, we can presume that it is no more a foreign contribution. And another question that is come is, in the case of an Indian company, which is 100% owned by a foreign entity, what is the test to check whether they are FDA compliant for being considered an Indian donation? Simple. I mean, whatever rules or regulations laid at the time of receipt of the capital, that should have been complied. And so instead of we go and check everything, basically a simple declaration generally will be suffice, stating that it has complied. Otherwise, even if they are given a declaration, still there is a non-compliance. Sometimes this may go into the wrong path. So a declaration is generally suffice. Can there be a transfer from one utilization account to another? Of course, but both utilization accounts should be informed through appropriate forms, whether at the time of registration or at the time of renewal or by way of change in the intimation of the bank accounts. So accordingly, the amount can be transferred from one utilization account to another utilization account. Okay. Okay, fine. Yeah, I'll come back to that, this one. Okay. So some of these points I am touching upon just because, sometime when I'm going into the concept of CSR, so we presume that, foreign contribution is not applicable. But what is foreign contribution? What is foreign source? Unless we understand, definitely this is going to be a challenging concept. Okay. So who cannot accept foreign contribution? Maybe it's not directly connected to this present session, but generally a candidate for election who is standing for election or correspondent, etc., they are not supposed to accept any foreign contributions. But since it's not relevant for this session, just I'm skipping. If you have any questions, of course, you can post it in Q&A. And such persons, of course, they can accept the foreign contribution by way of salary or by way of a payment in international trade, commerce, etc. And another thing is an exemption is also being given if the donor and donee happens to be two individuals. Up to 10 lakh, there is no reporting is required. But earlier it was used to be 1 lakh. Now it is enhanced from 1 lakh to 10 lakhs. So in case of an individual receiving foreign contribution, that money, that transaction should be reported to the MHA, that is Ministry of Home Affairs, through Form FC1. Okay. And if it happens to be a foreign contribution, because even CSR fund may fall into the concept of foreign contribution, such a receipt should be deposited only in the designated FCRA bank account. Now, as I've been mentioning, the SBI New Delhi main branch is the only designated branch where funds for FCRA can be received. Thereafter, that fund can be moved into another utilization account. But receipts, whether it is a foreign currency or Indian currency, if it is falling or fulfilling the criteria of foreign contribution, the money should be deposited into FCRA bank account only, and it is only SBI New Delhi main branch. And any receipt in terms of foreign contribution, they should be record that who have donated and all those stuff. Okay. And utilization. Basically, here there are many non-compliances that are happening. Basically, the foreign contribution should be utilized for the purpose for which it is received. Like suppose if the money has been received towards the capital expenditure, that money should not be used for revenue expenditure or vice versa. So basically, in a simple form, it should be utilized for the purpose for which it is received. And another important thing is the foreign contribution cannot be used. More than 20% of the foreign contribution received should not be utilized for the administrative purpose. It means there's a limit. Earlier it used to be 50%. Now it has been brought down to 20%. So up to 20% only can be utilized towards the administrative purposes, administrative expenses. And no foreign contribution can be invested in a speculative business. This is very important. Most of the times we have seen utilization as a non-compliance. And every asset that is purchased or acquired, it should be in the name of the association only. It means it cannot be kept in other forms. And any secondary income, that is interest, etc., also should be utilized for the purpose for which it is the principal amounts are received. So how the principal is supposed to be utilized, the same way the secondary income also should be utilized. And admin expenses, of course, there is a definition under Rule 5 of the FCRA rules. So the amount predominantly that we know, salaries, etc., are administrative expenditure in terms of general activity. So the amount should not be more than 20%. That's the criteria that we need to understand. Okay. Of course, this is also in terms of the admin expense only. This PPT anyway, I'll share it to the institute, and I think it can be posted here. But still, I'm touching upon those concepts which are relevant both from the FCRA perspective and CSR perspective, right? But generally, even admin expenses that we normally understand, if they are directly utilized, like suppose salaries or any remuneration, for the persons who are directly engaged in the training or collecting any data, because they are actually implementing the project. So their salaries are falling part of the non-administrative expenses or project expenses. That's what typically we call. But if it is for administrative purpose related people, then it will fall under the concept of the admin expenses. Okay. And if suppose the amounts are utilized for the purpose of general health checkup, or distributing kits or medicines, etc. So the salaries given to the doctors of the hospital or the camps that are being run, those salaries forming part of the project expenses, but not admin expenses. So we need to look at who are the people who are receiving those salaries and what for they are being employed. So accordingly, it may fall under the concept of admin and project expenses. And speculative business is another important thing, because the FCRA funds cannot be utilized for the purpose of speculative business. So wherever generally speculative business is with an intent of making higher benefit, higher profit or higher return, any investments made where there is a risk element is obviously high, those investments should not be involved. Generally, the funds should be parked either in FDs or government bonds, etc., but not in these kind of risk reward basis, securities. But debt-based investment, that is, typically like, mutual funds where the funds are invested into debt funds, then it can be considered that it is a regular business, but not a speculative business. Okay. Okay. So again, I'll come back to the Q&A because there seems to be, still a few more questions are flowing, because I don't want you hang up on questions. So maybe I am trying to address as well. Basically, can a grantee refund unutilized grant to the donor as per the demand? No, actually, as far as FCRA law is concerned, there is no provision that, if some recipient want to refund back the money, it's not possible. But still, we are making applications to the MHA seeking for, their approval. And generally, they are not, giving any specific approval. Hence, we presume that the MHA also doesn't want to give any such, exemption for the refunding the money. So practically under the law, there is no provision where the the FCRA funds can be refunded to the donor, even if there is any specific contract stating that unutilized funds should be refunded, but there is no such provision as such. Okay. Okay, Mr. Gauri is asking another question. If I get 12 lakh from my son as a gift, should it be reported? Of course, yes. Now the concept of 10 lakh is applicable for the receipts from foreign source to the Indian resident. Now practically NRIs also, for the limited purpose of reporting, yes, we need to report if the amount is more than 10 lakh. Whether it is per instance or per year, it is not clear. Generally, it is per instance. So each receipt, if it is exceeding 10 lakh, for each receipt, we have to report within the 60 days of receipt. Okay. Another question is whether registration of the trust not renewed in 2015 and hence was cancelled. Whatever funds available in the FCRA account, can it be used? No. Once the registration is cancelled, the fund has to be kept as it is, and the money has to be refunded to the government only. I mean, it has to be transferred to the government based on the order. But once FCRA funds are, unutilized funds are there, any further utilization should be subject to the order from the MHA only. If they permit to utilize, of course, can be done. Otherwise, the money has to be parked in a like FD or whatever it is, and money has to be transferred to the specified entities based on the MHA order. Okay. Another question is donation received from foreign citizen but a person of Indian origin, will it be considered as a foreign donation? Of course, yes. As I have been explaining, any foreign citizen, even if he might be earlier, Indian citizen, but once he becomes a non-Indian citizen, even if he is holding OCA card, still he is considered to be a foreign source. So any amount received from him is obviously a foreign donation and considered to be foreign contribution. Okay. So another thing is, okay, rent received out of the FC building. Okay, it means foreign contribution is utilized for the purchase or construction of building. Or foreigner giving Indian rupees donation, etc. in India to be deposited in SBI Delhi or in utilization account. Okay. So basically, any article, there is nothing called depositing in a bank account. But if it is a INR or a foreign currency, if the payer happens to be a foreign source, the money being received from such foreign source, even in INR or in foreign currency, that must be deposited only in SBI New Delhi main branch. And thereafter, the fund can be transferred to utilization account. But directly, the fund should not be deposited in utilization account. Because now the law is very clear. The funds, the receipt should happen first only in the designated SBI New Delhi main branch account. Okay. And okay, and one more thing is, okay, registration of trust not renewed to the Newton and hence was cancelled. Whatever funds available in the FCRA account, can it be used? Can you indicate under which circular section the amount should be refunded to government? No, as of now, the law doesn't permit utilization. It says until the registration is active, the funds can be received or funds can be utilized. So that way it means once the registration is cancelled or it is not renewed or it is surrendered, either way, any funds that are lying with the association, because earlier it used to be transferred from one association to another. But in 2020, as I've been mentioning, the concept of transfer from one association to another has been removed. So that way, now there is no option except to transfer the funds to the government or as per the direction of the MHA, because it is not under the general or specific concept. We have to wait for their order and it has to be accordingly transferred or utilized. Okay. So the law itself is very clear. When I say it's clear, it means they have removed a section or a rule which has been permitting earlier to transfer the funds from one association to another registered association without approval, or from one association to another association which is not registered but with the prior approval of the MHA. So this has been removed. It means the government wants to say very clearly, categorically, that it doesn't want to permit one association transferring the funds to another association. Hence, we have to transfer the money back to the government only. So, and there is no considered refund to the donor also. Rent received out of FC building. Okay. I mean, what I mean to say is the building has been acquired through foreign contribution. So any rent received being a secondary income, obviously that will also fall under the concept of foreign contribution. So any income received out of such foreign contribution, whether it is interest, rent, profit out of sale of such securities or whatever, everything should be deposited back into the foreign contribution, I mean FCRA designated bank account only, and utilization also has to happen accordingly. Okay. The only exception that we can see is services rendered and the payment is made by the non-resident towards such services or purchase of goods. That will not fall under the foreign contribution. Hence, it is, we need not to bother. But if any secondary income is coming directly from the asset where the source of fund is a foreign contribution, then such a secondary income should be treated equal to the foreign contribution. Okay. Okay. Another question is, okay, can a foreign citizen of Indian origin donate from his Indian NRO account? Of course, no. When I say he can donate, but without following the FCRA procedure, the recipient cannot receive the money, because whether it is NRO account, NRE account, or FCNRB account, or even regular Indian savings account, or even giving cash in INR, all these things, the moment the donor or the transferor happens to be a foreign source, any amount paid by him is obviously, a foreign contribution. Okay. Okay, I'll again, defer some of these questions because I'll come back on this. Okay, just give me a minute. Okay, I think I'm seeing, a lot of questions that are coming. So I thought, like, in between I address at least so as to ensure, like, the time is utilized for answering this. Yeah. Okay. So basically, as I've been mentioning, whenever a CSR fund is received by a foreign, when considered to be foreign contribution, naturally we have to maintain these designated accounts, and no Indian funds and FC funds can be mixed in the same account. Like suppose an organization which is receiving donations both from Indian and foreign sources, like even CSR fund that we are talking about. Basically, the Indian fund should not be kept in the utilization account, or a foreign contribution fund should not be kept in the non-utilization accounts. Designated utilization accounts. Okay. So basically, these funds should be segregated. Ideally, separate books need to be maintained, and the reports have to be given accordingly. Okay. And sometimes we see that if suppose the FCRA, the CSR funds or any donation falls under FCRA, what is the method of accounting we need to follow? Whether it should be mercantile system or cash-based system. Under FCRA law, there is no specific provision. Basically, any standard or acceptable method is fine. So the moment it is a company, naturally the recipient happens to be a company. Naturally, they have to follow the mercantile system. But if it is a trust or a society, even cash accounting system is also okay, or they also can follow the mercantile system. Okay. And the fund should be kept for at least, the document should be kept for at least 6 years. And as and when there is any inquiry, they have to provide accordingly. And these associations, they have to maintain separate register for the purpose of investments or money, whatever has been received, and they should be available for audit. Okay. Yeah. So whenever there is any foreign contribution is received, because foreign contribution law and CSR, obviously here for the current day topic, I want to give clarification why I am running through the FCRA, because CSR by itself is a concept. So whether it is a foreign contribution or not is depending upon the donor. So typically, if the Indian entity is falling under the definition of foreign source, that is a company which has FDA, and if it has not complied the FDA regulations, it falls under the FCI foreign source, and accordingly all the provisions of FCRA stands applicable. So any other CSR funds, suppose an Indian company which has complied FDA provisions, if it is giving CSR donation under the Companies Act, because normally, now the Indian companies having a specified threshold of profit or having a capital or a turnover should designate or allocate 2% of its 3 years average profits, 3 years average profits for the CSR purpose. It's a mandate under the Companies Act. So such money is given to any other organization. Naturally, that CSR fund may fall into the foreign contribution the moment Indian company has not complied the FDA regulations or rules, whatever the case may be. So the moment it falls under foreign source and the CSR funds falling under the foreign contribution law, all these provisions are applicable. So that is the reason mainly I'm trying to elaborate the foreign contribution while I'm talking about the CSR provisions. Okay. And annual returns, that is Form FC4, whenever foreign contribution has been received, the entity which is receiving such funds should file annual return with the MHA, that is on FCRA online website. It should be filed within 9 months. And along with this FC4, the receipts and payment statement and income and expenditure statement and balance sheet. These 3 documents should be duly certified or duly audited by a chartered accountant, should be filed along with the form FC4, and it should reflect the amount received during the current year in the designated bank account, or if it is not received in such account, then we need to show which are the accounts that are coming to picture, and that will be considered to be a violation, etc. So if the amount is transferred from one designated account to another designated account, that fund transfer also should be reflected. And normally, along with this particular form FC4, a bank statement also should be attached. Generally, people are reluctant to do, but whenever such requirement is there, we have to comply. So bank statement and receipts and payment statement, income and expenditure statement, account, and the concept of balance sheet. All these 3 should be audited and submitted along with the form FC4. And as I've been mentioning earlier, these account statements should be maintained for at least 6 years. And suppose if there is no foreign contribution received, so even then, nil return need to be filed. And now, of course, this is an electronic form. Previously, it used to be form FC6. Now it is FC4, should be filed in electronic form only. And any non-submission of such annual return is leading to the cancellation of registration or cancellation of the prior permission, whatever the case may be. Okay. And any renewal will not be given, because as I've been mentioning in my beginning of the session, that the government has cancelled multiple organizations related foreign contribution license just because of non-submission of the annual returns. Okay. This is a typical procedure. What is the registration for, fee for registration or seeking prior permission or renewal, etc. And it's just more of number. And the organization which is receiving CSR funds, and if they are not registered, like earlier I've been mentioning, as per the this new act that has come into picture from 1st May 2011, any previous organization which has registrations, their registration stands automatically convert into renewable registration, and it is valid for not more than 5 years. Okay. And any registration can be renewed if the organization is engaged into multi-year project. It means they receive the money in 1 year, but the spending may happen more than 1 year period. Then the renewal application should be filed at least 12 months before the date of expiry. And if it is not a multi-year project, then at least 6 months is the period for which the application need to be submitted. And at present, whatever be the reason, MHA has kept all the renewal applications on hold. It means they are giving extensions based on the latest extension. Any renewal that was due in year 2022, where applications are submitted within the due timeline, they are automatically extended. The latest extension was given up to March 23. Thereafter, we don't know whether they again do it or whatever. So basically, we are seeing MHA has kept almost all renewal applications on hold. Okay. So as I've been mentioning, every organization receiving CSR funds, if it falls under the foreign contribution, they have to open a separate account, and also they have to open separate utilization accounts, because receipt account is now not permitted for utilization purpose. The receipt account is only for receiving the foreign contributions. From there, the fund should be transferred to the utilization account. And from that utilization account, it can be transferred to another utilization account. But from utilization account, the money should not go back to the fund receipt account. Okay. So that's also is very important, because sometimes we have seen can I, transfer this back to SBI New Delhi main branch? From there, I will refund. No, it's not possible. Okay. Fine. So whenever these foreign contribution receipts are there, and if the money is, not being utilized as per the designated way, so basically it's going to be considered to be a non-compliance, and there are compounding offenses are involved. Okay. So okay. So basically, there are a few more questions that are coming into picture. Okay, just give me a minute. I am marking up what answers I have already addressed. So basically, okay, can you please stress more on body corporate shareholding amendment with respect to CSR as well? No, see, the body corporate definition is basically now it is coming into the concept. The definition of body corporate includes whether it includes LLP or not. No, all these concepts are coming into picture. Basically, now when the recent amendments have covered, it is all talking about with respect to the what you call FD. So, and the body corporates which are falling into the CSR spending. So, because the body corporate definition, it all obviously includes company. Also, it includes the what you call a company registered, a body corporate set up under the separate law, or even a foreign company falls under the body corporate. Even a branch which is falling under the definition of body corporate being a foreign entity, even they are also obliged to spend the CSR, because now the government want to ensure whoever utilize the Indian nature's resources, national resources, including manpower or whatever, they are obliged to spend something for the society. Okay. So, and the concept of CSR is such that it is now directly linked to the profits. Okay. So that way, now all body corporates which are falling under the concept of body corporate under Companies Act, the concept of CSR is applicable, and accordingly the money has to be spent. Okay. Just give me a minute. I am just marking out. In another thing is, Mr. Joseph is asking, okay, in what circumstances can a CSR fund be termed as foreign contribution? No, there is nothing called CSR fund. Only thing is the donor, the transferor, if they happen to be a foreign source. Any money spent even for CSR purpose by such payer is considered to be foreign source or a foreign contribution. So it is all about the payer, whether the payer is falling into the concept of foreign source. That is the only criteria we need to first look at. Once the payer or the donor happens to be a foreign source, whether the money is being paid towards the CSR fund or towards the regular donation, or even if the CSR is not a mandated CSR, even voluntarily, if the company want to spend more than the designated 2% amount, still the money is considered to be a foreign source or a foreign contribution if the payer happened to be a foreign source. So it's not that all CSR funds are considered to be foreign contribution, or all CSR funds are exempted from foreign contribution. There is nothing like that. Who is the payer? If the payer is fulfilling the criteria laid down for identifying the foreign source, then the money, including CSR fund, paid by such a foreign source is a foreign contribution. That is the linking we need to see. Otherwise, CSR funds doesn't fall under the foreign contribution law. Who is the payer? Okay. In what, sir? Okay. Applicability of FCRA to CSR funding. I think it's a repetitive question. Okay. Fine. Are there any questions? Okay. Yeah. So basically, whenever the non-submission of annual returns are there, because the moment a CSR fund is falling under the FCRA, then as I mentioned, annual return need to be filed by the recipient. And one more important thing that you may look at is under the Companies Act also, if the recipient wants to receive CSR funds as mandated under the Companies Act, the organization should be registered or filed the form CSR1 on the MCA website. So only those organizations which are fulfilling the criteria of filing of form CSR1 on the MCA website and having duly filed acknowledgement, and in case the foreign contribution is coming into picture, then also having appropriate registration under FCRA law, only such organizations can receive the CSR donations. So basically, here it's a three objectives are interlinked to each other. One is it a mandated spend under the Companies Act or not, is one aspect. Whether it is mandated or voluntary contribution also, but who is the donor? Accordingly, we need to look at. So the single truth that we have to look at is whether the Indian company or a foreign entity which is operating in India, if there is a foreign contribution law applicability because of the definition of foreign source is when fulfilled, then obviously the CSR funds transferred from such Indian entity to a organization which is engaged in the CSR activity, naturally it falls under the foreign contribution law. This is one important thing I want to repeatedly mention, because this session is talking the or touching upon mainly FCRA law, because CSR spending is a concept, but when FCRA law is applicable is what we need to understand. Okay. And any non-submission or delay in submission of the annual return, obviously the penalty is directly linked to the amount received, and it is 2% of the foreign contribution received or 10,000, whichever is higher, if there is a delay up to 90 days. If it is more than 90 and up to 180 days, it is 3% of the amount involved or 20,000, whichever is higher. And if it is more than 180 days, then the amount is 5% of the foreign contribution received. So here foreign contribution again includes CSR fund also, as I've been reiterating multiple times, or 50,000, whichever is higher. In addition, there is a 500 rupees per day penalty beyond 180 days. So, a simple form non-filing can lead to a lot of monetary penalties. Okay. So whenever a CSR fund falling into the foreign contribution, if suppose the recipient accepts such money, and maybe through check or whatever, but if it is not deposited into the designated bank account or so, again there are penalties. Basically, the quantum of penalty can go up to, in case of check is received but it is not deposited or not utilized, okay, then the penalty is 10,000 rupees or 2% of the amount involved, whichever is higher. Suppose if the check is accepted but it is not deposited into the bank account, that is the first point we all talked about. Suppose if the check is received and also it is deposited, instead of 10,000, there is a 25,000 is the minimum penalty, and instead of 2%, 3% is the penalty. Okay. And acceptance of check and utilization. And basically later part MHA has come and understood that the amount is diverted for a purpose which is not designated, or it is utilized for maybe not in compliance of FCRA law, then the minimum penalty is 1 lakh rupees or 5% of the foreign contribution, whichever is higher. Okay. And acceptance of any foreign contribution, because CSR fund can also happen in such a way that instead of money, sometimes the organization can build a infrastructure also. That is also possible, right? So there, if any article is received or any donation in the form of article is received, then naturally, if the articles are received without such registration under FCRA law, then also there is a penalty, that is either 10,000 or 2% of the consideration value is, foreign contribution, because in article also can be valued depending upon the valuation criteria that are given. So basically there also the penalty is 2% of the such article value. Okay. So whenever there is any compounding, and if the compounding fee is not paid, then the MHA can take strict action by way of initiating the penal prosecution, including filing the case before the courts and all those stuff. They can do that. And also they can suspend existing registration in case the penalty is not paid. Okay. And basically, just because the money has been delivered by the non-resident or Indian company falling into the definition of foreign source, if the fund is transferred just because the bank account is known, still the penalty can be levied. What I mean to say is, just because there is an electronic fund transfer, even without the knowledge of the donee or the recipient, there also the penalty can happen. Okay, because just because of the ignorance, the compounding or penalty proceedings cannot be waived off. Okay, and whenever there is an offense has been compounded, obviously again it will not lead into the prosecution. That's a natural course that we know. And if the similar non-compliance are happened with the gap of 3 years, within the gap of 3 years, then compounding is not permissible. Okay, but if the non-compliance are happened after a gap of 3 years, then one more compounding can be filed. Okay, and whenever there is no compounding happen, basically the prosecution or investigation will happen through the designated police authorities, that is either CBI or state police, depending upon the value involved. But generally, anything above 1 crore, CBI will come into picture, and below 1 crore, the state police department will come into picture. Okay, just give me a minute. I'll take another one. Okay. I think largely I addressed the questions. If you have few more questions, feel free, no problem, because we have good amount of time. I want to spend more time for the purpose of answering the questions. Because some of you might be, experienced or experts of this. Okay. What is to be done when a foreign national deposits money into a domestic account by mistake? That's what I mean. Mistake is obviously not a exempted thing here under the foreign contribution law. So we are exposed to the penalty. I mean, the recipient is exposed to penalty. And only thing is, the mens rea may not be a criteria here, because we need to ensure the payer is aware of the recipient compliance requirement as well, and accordingly, whenever any ask or any request has been made to send the CSR fund contribution or a foreign contribution, whatever, appropriate instruction should be given that the moment it is falling under the foreign contribution requirement, no money should be deposited directly. And one more thing is even cash. Suppose sometime the donor may prefer to give the cash. There also, there is a requirement of compliance under the Income Tax Act, because now largely anything about 10,000 rupees kind of donations, we are not supposed to give in cash. And one more important thing is like anonymous donations. Like suppose a organization kept, like a temple kept some kind of box or a hundi for purpose of receiving the donations. There also, any money received in foreign currency is considered to be foreign contribution. But INR, because the donor cannot be identified, there is no question of, the concept of foreign contribution being applicable just because a non-resident has deposited. A non-resident cannot be identified. That's a very important thing. Okay. So they're coming back to the same question. Basically, even if the foreign national deposit the money directly, even by mistake, that is subject to penal prosecution. Okay. If the NRO account of PAO has an Indian income like rent from house, property, or interest from banks, etc., whether FCR is applicable if there is a contribution from such NRO account. Yes. Because please remember, the source of funds under INR is not the differentiating factor. Basically, who is the donor? Whether the donor is considered to be a foreign source. If that is the case, means the donor happens to be a foreign source as given in the definition. Any funds, whether INR or even a source of funds from India, still foreign contribution law is applicable. Okay. Another thing is, even an Indian company which is having entirely Indian or domestic business only, but if there is an FDI, and if it is not in compliance of the FCRA law, FDI law, then the CSR fund transfer from Indian company to another Indian entity falls under the restrictions of FCRA law. So again, I am telling you, basically, it is not the source of income. It is who is the donor. That's a single point we need to keep it in mind. And once the donor criteria is fulfilling the criteria of foreign source, then whatever money is being transferred, whatever articles, whatever securities are delivered or transferred, that falls under the foreign contribution. That's what we need to understand. Okay. Another question is, what happens if an Indian makes a remittance to the FCRA account? Yeah, like an Indian resident who is not falling under the concept of foreign source, if they transfer the money to FCRA account, of course, generally the bank declines such credits, honestly, because now SBI or even earlier other banks who are opened or permitted to open the bank accounts, they used to screen or automatically they used to keep the freeze on receipt of funds in INR. So if suppose an Indian company which is fulfilling the criteria of foreign source, if they want to transfer INR, we have to we have to first intimate to the bank stating that basically the proposed transaction fulfills the criteria of FCRA. We need to prove beyond the doubt. Then only the bank used to permit that particular credit. So ideally, this Indian money, INR, will not be directly deposited. So bank has that automatic check. Well, only by case they are permitting. Okay. So that way, it's very remote chance, but still, if it happens, of course, it falls under the non-compliance category. Okay. What steps should the NGO take to ensure the donor is a foreign source? Many times a person may not disclose his nationality. What is to be done when an anonymous person donates to domestic account? Later it is known that he was a foreign source. No, basically adequate awareness need to be created among the donors, stating that what is the FCRA law. So what are the restrictions under that? So basically the donor has to provide his nationality either in the declaration or through the documentation. So once that is known, basically the money should not be going into the FCRA law, without having proper permission or renewal, as the case may be. So we cannot say, the donor has not disclosed, hence the money has wrongly deposited. Here, ignorance is not a bliss. Ignorance is not an excuse. Okay. Sale of milk out of cow purchased by foreign contribution or such a small amount, where to deposit? Okay. Basically, when we say sale of milk, it is as good as sale of goods. So for sale of goods, it will not be considered to be secondary receipt of foreign contribution. So any amount received towards sale of goods or provision of services doesn't it doesn't fall under the concept of foreign contribution. So that way, this sale of milk by purchased through the foreign contribution source doesn't fall under the secondary income criteria. The only secondary income criteria is whether any interest is earned out of the foreign contribution source of funds or whether any profit out of such investments. Okay. So basically, sale of goods and service doesn't fall under the foreign contribution. Okay, another question is, while testing a payment gateway, a test payment made by an Indian citizen was credited to SBI New Delhi main branch. Oh, what is the remedy? Unfortunately, there seems to be an error. It is not supposed to be. So maybe we can seek the compounding on a voluntary basis. Instead of we wait for the order from MHA, then making the payment. Best thing is we can make it. And compounding, sometime it may be zero also. The moment we prove what is the real case or genuine matter here. Okay, so that way it's not going to be material, but still any amount which is not falling under the concept of FCRA, the money should not be deposited into the SBI New Delhi main branch. Okay. Okay, for FCRA registration by a trust, which is a hospital, is it mandatory to have Section 12 and 80G registration? Of course, now FCRA Act is very clear that all the trusts or societies or non-profit organizations which are receiving the money, they should have necessary registration under 12AB or 80G of this, because even they are asking copies also. Even the numbers are copies of such registration just to ensure they are fulfilling the criteria of eligible organization under the income tax law. So that way, now without having such registrations, even an application cannot be filed or a renewal application cannot be filed, whatever the case may be. So 12AB registration and 80G registration is mandatory. Okay. So I think largely these are the questions that have been received. Okay. Just give me a minute. I'll try to see other topic. Okay. So basically, whenever there is no compounding or even compounding application has been filed, but it is not accepted, then even the CSR fund, which is falling under FCRA, so basically it will be exposed to penalties under the FCRA law. So basically, any false statement is submitted or a declaration or whatever wrong documents are submitted, then the imprisonment can go up to 3 years or with fine or with both. So here fine is not specified basically, and generally it can go depending upon the value that is involved. And any delivery or a transfer or dealing with any article or a currency, basically where there is a prohibitory orders or if there is any contravention of the FCRA law, then there is an imprisonment up to 3 years or with fine or with both. And basically, whenever there is such prohibitory orders, there is an additional penalty equal to the market value of the article. So apart from this particular standard, this thing, they can confiscate or they can also levy equal penalty. This is what we need to understand whenever there is any offense under the FCRA law. Then the conceptual thing is, if suppose there is FCRA law is applicable, now in fact MHA is very active on this particular account. There is a separate monitoring or inspection investigation team that is coming into picture. There is like monitoring unit 1 and a monitoring unit 2. So basically now this monitoring unit is supposed to do a detailed inspection, or rather we call it an audit, right? Who defaults in filing of annual returns, or there is any reference that has been received from one regulatory organization or investigation agency to MHA that there seems to be a prima facie contravention of the law. or whenever a perceived or actual misutilization or misappropriation is involved. So then this monitoring unit can carry physical inspection, and they can also lead or bring the matter for the penal prosecution. Okay, so in all these cases a lot of prosecution is going on. In fact, recently we have seen where one of our known client, basically, which has been in existence for last 20 years, there is a detailed audit happened for last 5 years. So they have started engaging the auditors also, so that they want to understand the nature and extent of the complaints that have been made. Generally, they will give advance intimation, and on the fixed date, they will come and carry the inspection. Okay. So this is more of again procedure, and basically whenever this inspection or investigation happens, then obviously a follow-on inspection can happen from either a CBI or state government, as I have been mentioning, depending upon the value involved, right? So whenever a CSR fund is coming under in the terms of the FCRA, then there is a possibility that if there is any misutilization, the government can cancel the certificate of registration. Of course, an opportunity of being heard should be given. And this can happen whether there is an incorrect or a false statement, as I've been mentioning in annual returns. If there is any incorrect or false information has been given, the government can take stringent action of cancellation of the registration. Or if the inspection or audit reveals that there are any non-compliance that happened, where the specific terms and conditions of the registration are not been fully fulfilled, and accordingly, or even some of the provisions of the law have not been complied. So in that case, there can be possibility of cancellation of registration is involved. Or sometime, and in fact, recently we have seen some of the case like Greenpeace and these kind of organizations where the MHA, based on the intelligent information that has been received, they cancel the registration because where the public interest is been compromised. So based on such lead from the other organizations or based on the investigation or inspection, the registrations can be cancelled. And generally, any cancellation of the certificate debars the CSR recipient from, at least for 3 years, they cannot go back and make a prior permission application also, or they cannot make an application for new registration also. It means they are debarred for at least 3 years. It will go into the cold chain. Okay. And any amount that is unutilized, of course, this point already clarified through Q&A session, but that money should be kept under the fixed deposit or whatever, and it cannot be disposed of until further instructions are received from the government. So that is a MHA. And the bank also should freeze any debit. They can't allow any debit, and hence the money has to be kept unutilized, and based on the direction from the government only the funds can be utilized. So here CSR funds falling under the foreign contribution, I think primarily this is what we need to understand about. So the donor, if they fall under the concept of the foreign contribution, and if they not complied the FCRA law, the registration also can be suspended. That is, without cancellation, they can restrict the receipt of further foreign contributions, even including CSR funds. So during that period, no fresh consideration can be received, and only some of the existing amount they can utilize. Like suppose already foreign contribution funds are there, so up to 25% they can utilize with the prior approval of central government, and balance has to be kept aside. And if the revocation has happened, in the sense the suspension has been cancelled, then anyway the balance funds can be utilized. Okay. Yeah. Now, in fact, recently the government has introduced the concept of voluntary surrender, as I've been mentioning in the beginning of the session, that earlier organizations were not supposed to surrender the registration, but now that has been enabled. Hence, the form FC7 has been introduced. Only thing is, before cancellation, surrender of this certificate, the government may review the accounts and confirm that there are no existing contraventions. So only upon confirming such compliance are not there, registration cannot be surrendered. So we can make an intent of surrendering, and government will cancel the certificate only upon confirming that there are no pending non-compliances. Okay. So basically, this is what my thoughts are. Still, if you have few questions, please feel free to post, and to the extent possible, definitely I'll try to answer them. And I think there are few MCQs, and I'm not sure when and how it will be given by. So any few questions. So I'm stopping sharing of screen so that at least better I can interact. Sir, what about the MCQs, sir? Are we posting MCQs now, or are you posting directly there on the website? So we will share the PPT. I think the institute will keep it on that website so that you can download. Definitely, I'm happy to share. There is no problem with that. Yeah, there seems to be some of the slides are not updated anyway. I'll update if there is any error in that. Pardon me for that. Any old data that might have been captured. Okay. A new question that has come into picture is basically in case we apply for regular registration, how long it takes? Normally, there is no strict timeline that actually MHA is following based on a lot of inputs that they are taking from other department. Like in one of the case, the registration has been given after almost 1.5 years of rigorous, scrutiny that has been carried on. So these days, MHA is referring the the application to the validation through Ministry of External Affairs. So the proposed donors, if they are specifically identified, like suppose if we make an application for prior permission or regular registration, a lot of scrutiny is going on from the perspective of donor also. So donor review will happen through the Ministry of External Affairs. So generally they may take their own time, and also even the governing body members, their profiles are also being thoroughly scrutinized. So generally, once we make an application, either CBI based on the threshold limit of 1 crore or so, CBI will come and inspect the books and the premises of the organization, the proposed recipient, or if the amount is below 1 crore, as I've been mentioning, the state government department people have to, the police has to come and inspect the premises. Based on their reports only, MHA can take next steps of issuing the certificate of registration. So it may take 1 year, it may take 1.5 years, or it may sometime be completed within 6 months. So it depends upon the facts of the case. So if there are too many organizations are involved along with the proposed donee, definitely it's going to be taking a long time. But we must expect minimum 1 year. That's how generally these days it's going on. So what is the appeal process in case there is an audit observation? So appeal is normally like once audit observation is issued, they issue the compounding order. So once compounding order is issued, either we can ignore or we can pay. But if it is ignored, then it will lead to adjudication. Okay. Then they may file a case before the court, where again, in compliance of the FCRA, the court has to pass the order. Thereafter, again, it will go to the appeal under the regular process. Okay. Okay. In what circumstance? I think this question is answered. Okay. Is it mandatory that we should have already obtained prior approval at least in 10 cases? Okay, I'm not sure, but what I'm presuming is whether before we make an application for prior permission or rather regular registration, is there any specific criteria that need to be fulfilled? So for prior permission, or rather than prior permission, I would say it's a regular registration. Basically, the organization should have spent at least 10 lakh rupees for the main objects of the recipient organization. It means in last 3 years or so, the organization should spend at least 10 lakh rupees on the project expenses, not on administrative expenses. Okay, then only regular registration can be applied for. Otherwise, we should go for the prior permission only. So this is what I think the question is meant to be. If still any further clarification, of course, you can make it. Is there any limit for utilization of FC from the SBI account? There is no specific limit. Only thing is the money should be utilized for the objects of the recipient organization. So even normally what is happening these days, the SBI New Delhi main branch is transferring the recipient, the funds from the receipt account to the utilization account. So the both accounts can be maintained with the SBI, or the receipt account must be anyway with the SBI account, but the utilization account can be maintained with a different AD bank also. But there is no time limit. Normally, however, SBI as an administrative control, they are saying that the money should be transferred within maximum period of 90 days. Sometimes they say 30, 60, 90, but maximum is 90. So it is preferred to be transferred as early as possible, generally 30 days. Okay. Whether prior approval also will take more time. Of course, whether prior approval or regular registration, these days, MHA is doing a lot of due diligence. So they are actually looking at more information than what we generally presume that we should provide. So even prior permissions are also taking time. And please remember, under FCRA law, there is no deemed approval concept. It means if they don't give within specified 90 days period, will it be considered to be deemed approval? No. They can deny or they can drag, but the applicant should wait. Okay. So even prior permission or regular registration, yes, it is taking a lot of time and we have to wait. Registration was not renewed and hence it was cancelled. How long should I file the annual returns? No, basically, if the registration is not renewed, it means it is not considered to be cancelled, but it is there is no proper registration active. So without that renewed registration, in fact, no online form can be filed. So in fact, there is no requirement of filing annual return in case the registration is not renewed. Okay. So there is no concept called, cancellation will happen when there is a valid registration. If suppose the renewal is not done, it is not considered to be a cancellation, but it is a lapse of the registration. So these two are different concepts. Okay. So non-renewal of registration is not considered to be cancellation of registration. Please remember. Cancellation happens when there is a valid registration is subsisting. So if there is no renewal, no filing, no requirement of any filing of annual return, but the existing funds should not be utilized. That's the only criteria we need to look at. Okay. So one more question is, applied for renewal in the month of June 21. Till now it is in process. Of course, as I've been mentioning, there are multiple applications that are filed for renewal, and MHA has kept all the applications on hold. And there it is stating that the the inspection has to happen, and we don't know why inspection is also not completed. But without inspection, they seem to be not in a mood to make a renewal. But so many organizations have applied for renewal, and obviously they may not go for the inspection of each and every applicant. So maybe they are selecting some of the applications, and balance they may automatically renew. That's how we are thinking. So still it is there. I mean, it's on hold. We have to wait. There is no mandate that they should issue within so and so timeline. Unfortunately, FCRA law has given that generally in 90 days MHA has to turn around for the application related update, but that's not what on ground it is happening. And one more is a newly formed trust can apply for registration. Generally, application can be made, but they will not give renewal. Registration. Generally, prior permission can be applied, but direct regular registration, MHA is not in inclination to give any such approvals. So unless there is a very strong case where, if suppose an existing FCRA registered organization is carving out one of the division into a new activity and accordingly formed a new entity, of course that can be one of the exception case where the promoter entity is covered under the FCRA law. Hence, the MHA may consider to give the approval. Otherwise, a standalone new organization normally will not be eligible for the regular registration, but they can make an application for prior permission. That's what we need to understand. Okay. But even such case, they are sending letters requesting us to file the annual return. I think only in the case of cancellation, basically there is a possibility of filing annual return until the date of cancellation. But there is a one thing that is possible until the financial year up to which the part period. If suppose there is a registration, valid registration is there, then there is a requirement of filing the annual return. But if post completion of the renewal or non-granting of the renewal in the next financial year, there is no concept of filing annual return. And please remember, the system is designed in such a way that there should be a valid registration to file the annual return. So obviously, yes, there could be some of the letters that might be issued asking to file the annual return, but that is possible only in physical form. In some of the cases, in fact, MHA has taken the previous financial year's related annual return in physical form, but now sometime we are getting a direction that it should be filed only in online. So there is a mixed communication as far as the annual returns are concerned. So we need to engage with the specific MHA just to ensure that there is no confusion here. So even inspection officers have come, they have taken documents. Even then, registrations are on hold, unfortunately, because as been mentioning, basically, even after completion of inspection, there are cases where no renewals are being granted. That's why, in fact, if you look at the FCRA online website, the notifications are issued that all applications filed till a designated date within the given timeline requirement, they are automatically stands extended. Like earlier, they are given up to September, then they are given up to March, like that. So MHA as of now is extending the registration from time to time, but they have not specifically issued the certificate, and all the applications are on hold. Okay. So I think these are the main questions that have been received. Yep, I think still any specific queries? Yeah, I'm happy to answer. So basically, registration renewal, if it has not happened, it's not a cancellation. Please remember, these two are two different concepts. Cancellation happens only when valid registration is subsisting. Okay, since it is not renewed, it is not a cancellation. These two are two independent concepts. Okay. So until the date of cancellation, in case the certificate is cancelled, or until the financial year in which registration was valid, up to that time, this annual returns need to be filed, but system is not permitting. That's what just I want to bring it to your attention. So system is asking for the valid registration to be subsisting. Maybe still they are yet to work on their backend systems. So annual returns are unable to be filed unless there is a valid registration. So we can communicate this fact that system is not allowing or whatsoever, so that at least we have made an effort, and basically, still the system is restraining us from filing that. Okay. Okay, one more question. Darpan registration is mandatory for FCRA registration. Yes. As of now, FCRA system is directly interlinked with the Darpan system. So that way, for non-FCRA cases, Darpan registration is not as such mandatory, because it is an optional. But for FCRA purpose, Darpan registration is mandatory. System is specifically asking that link, the Darpan registration number also. So yes, Darpan registration is required. What is the reason why all NGOs to be required to be registered with Darpan? Okay, this Darpan is nothing but different departments are monitoring the NGOs. So that information need to be there, so that because earlier what happened before this Darpan concept has been introduced, many organizations who have obtained the registration under FCRA, their whereabouts were not actually been traced. The organizations are keeping the fake address, or they have not updated their address. So to monitor all that, now government has made that concept of Darpan, where at least their KYC and many other concepts, they want to keep it automatically. This information is exchanged with the multiple departments, because generally we see this as a financial transaction, but for the government, it is basically very sensitivity involved. And we have seen conversions from one religion or faith to another religions are happening through the funding from NGOs. So we don't know. There are many things which generally we don't come across, and they don't come across to our naked eye. So the government want to trace down a lot of organizations who are maybe doing anti-social element activities or whatsoever, or which are not actually helping to the national security. So accordingly, this Darpan registration is a first point of information for many government departments. Hence, this Darpan registration is mandatory before FCRA registration is obtained. Should religious trust get registration with Darpan? Of course, that's how it has started. So long they don't obtain, they don't take the FCRA funds as such, it's not mandatory. But most of the times, whenever they go for different departments for any registration, they are advising, rather they are insisting to go for the Darpan registration. So that's how we have to see. So it is advisable to have the Darpan registration, whether it is religious or education purpose, whatever the trust. If the moment they are falling under the concept of NGO, it is better to have Darpan registration. And for FCRA, of course, it is mandatory. Okay. So yeah, the PPT anyway, I'll definitely share with the insured. Darpan, whether Darpan request renewal? No, there is no such concept. It's only one-time registration. Of course, in future we don't know. As of now, Darpan is only one-time registration, because thereafter, whenever there is a link to other departments, generally they are getting backend data from other websites also. So there is no such specific thing, but we don't know. In future, there could be annual KYC compliance kind of thing may be there. As of now, it's only one-time registration. Okay. Yeah, good friends. I think there is a good amount of response that are coming up, and hopefully, we are able to give the answers. And definitely, this session could be some of the benefit to you all, because most of the professionals, these days we are observing that they are not getting familiarized with because CSR fund is a noble concept where multiple companies are getting. In fact, if you see recently, the SEBI has introduced the concept of social exchange, where the organizations or companies which are involved into the social entrepreneurship, basically they are also permitted to get listed their shares through the social exchange. This concept is already familiarized. So that way, ideally, what summary we can make it is CSR is still yet to gain its true spirit, because recently even ROCs are sending a lot of notices to the non-compliant companies, because recently there are a lot of changes that have come in CSR utilization concept. If suppose the funds are not utilized in maximum period of 3 years, the fund has to be transferred to the designated trust of the government. The only who can, in fact, make an application of these funds for the society. So with all this that is coming up, the government is actually putting a lot of importance or assigning a lot of importance to the CSR funds, its utilization and the end benefit on the society. Okay. Okay, one more question is MCA does it require any return to be filed by the trust registered with the MCA? To my knowledge, no. As of now, there is no such form. It's only one-time registration. They are giving the acknowledgement. So this number is getting interlinked with the returns that are required to be filed by the companies which are spending the stipulated 2% CSR. So now they're linking only the primary information. Maybe down the line, definitely a lot much activity may come into picture, because MCA cannot monitor the trust, but only thing is they want to identify the trust, whether it is trust or society, whatever it is. So basically MCA is only taking the input from the trust or society as a one-time registration. But a company which is spending the CSR fund, they are supposed to ensure that all the compliances as required under Companies Act are being fulfilled. In fact, recently MCA has released the form specifically for CSR utilization also. So now definitely we are going to see a lot of enforcement from MCA also for non-spending of the mandated CSR. In fact, recently we have seen penalties also started levied for the non-spending of the CSR funds. So from at least from 2022 financial year onwards, there is a lot of emphasis laid down on the CSR fund utilization. And if suppose it is unutilized, is it in kept in a separate bank account as required under CSR regulations under the Companies Act? And also within that completed time, if the funds are not utilized, then whether the funds are automatically being transferred to the designated trust. So that way we must be watching out, and a lot of compliance is required from the CSR perspective. Okay. Good friends, I think almost I have done. Still any specific queries? I think another 5 minutes max we can take it. 2 to 3 questions I believe we can address. Okay, no more queries. I believe sorry, the PPT, once it is shared, it may add some of the value that you are looking at. Basically, the sum and substance is we have to look at the CSR funding and FCRA side by side. Once the donor happened to be falling under the definition of foreign source, FCRA law is automatically triggered. So accordingly, we need to watch out, and we need to take, the recipient has to take adequate declaration that are they falling under the concept of foreign source. And please remember, currency is not the criteria, means INR or foreign currency is not the criteria. Irrespective of the currency, the donor or the payer happens to be a foreign source, the contribution is considered to be foreign contribution only. Okay. So once it is a foreign contribution, all the provisions of FCRA law naturally gets applied, and accordingly the non-compliance can kick in. Okay. So anyway, PPT again will share, just let us see that. If I receive a donation in kind from foreign entity, whether FCRA is triggered? Yes, of course. Whether it is in kind or through cash, in all the cases, FCRA law is applicable, irrespective of the mode of receipt. Basically, it is always the payer, not the payee. Payer is the criteria, and if it is CSR fund or non-CSR fund, any donation may fall under FCRA depending upon the payer alone. Okay. Good friends, thank you. I think almost we have spent a good amount of time on the FCRA thing. And still, if you have any questions, I think you can post to the institute, and we'll try to answer through that as well.
Thank you, sir. Murali Krishnan, sir. Thank you, sir. Thank you for your webinar today. It's a very pleasure to attend, sir. Thank you. Thank you, sir.
Thank you. Thank you. Yeah. Have a good day. Thank you.
Thanks.